Yo, what's going on, guys? It's your boy Trillionaire Mac. Welcome back to another YouTube video. So before we get started, if you're not subscribed to this channel, feel free to click that subscribe button, as well as click that bell notification icon to be updated whenever I upload a new video. Alright, and hit that thumbs up button if you find any value within this video. So in this video, we're going to be talking about how I refine my order blocks. This is a question that I get all the time. Like, how do I refine my order blocks? How do I get such a tight zone, things like that. All right, so we're going to be talking about that in today's video. So I take advantage of 3 different types of market structure when we are actually within the market. All right, if you guys want a video about the 3 different types of market structure that I do take advantage of, feel free to leave it in the comments down below, and I'll definitely upload a slight video explaining that. All right, but as it relates to how I refine, I refine 3 different ways pretty much. All right, so imagine that this is already printed. Okay, and let's say price comes back down to this range, right? And I have my order block already refined down right here, or my demand zone already refined down. So there's 3 ways that I do it. So I'm gonna do a little bit of artwork here for you guys. All right, it's very, very simple how I do it. Is nothing really really too complicated. I'm just gonna keep all of my candles black, okay, in this for this example. Actually, no, we won't keep them black. But let's say that this is let's bring this to the front. And this video may be a little longer than usual, okay, because I'm going to go in, not really in depth, but I'm going to really explain how I do this. Okay, so for now, we'll just make it this color, and we'll have a line. All right, so let's say I have, some type of range demand or pivot demand, right? This is the last bearish candlestick right here, okay? And then let's say we have, something like this. Let's move that over. Okay, so let's say that this is a bearish candle right here, or a bullish candle, excuse me. All right, and then let's say we have a bullish candle right here. Right? And then let's say price just takes off and continues to push to the upside. Let's move this up. Oh man, it's going to take forever to move up. We'll just do it like that. There we go. Okay, and then let's move this down actually. All right, let's change this to, we'll change these 2 candles to bullish, so I'll make them a green color, I guess. This is not even. There we go. All right. Not the best type of artist when it comes to using these tools, but it's okay. We're gonna get through this. Let's send this to the back. Okay. All right, and then let's say price, takes off. All right, takes off and then starts to make its way back down. Okay, so let's imagine that we have just drawn out the schematic that has taken place right here. Okay, price has taken off with this push to the upside. That's what we see here. And then price creates a high and then starts to reverse, and that's what we see here. All right, so now you guys know basically what's going on here. All right, let's say this takes place. There are 3 ways that I can refine. Okay, one way is simply just using, what most people use, which is going to be the last bearish candle before the bullish push to the upside, which would be this candle right here. Okay, this is normally what individuals do. That is completely fine if that's how you want to refine. I'm not going to really go into detail about my favorite style of refinement because it really depends on how the candlesticks are looking in that area. But as you guys continue to backtest, it'll become easier and easier. Okay, the second way that I like to refine. Okay, so let's talk about the pros and the cons of this refinement. The pros and the cons of this refinement is you're really not going to miss a trade. Even if this area fails, right, your strike rate on this entire range is going to be extremely high. Now, I don't just take position like order block positions. Okay, my students and I, there's a 2-step process that or a 3-step process that I look for when price comes back down to this zone, just to make sure that price can push to the upside, and that's also how I get extremely tight stops. So like let's say this is on the H1 time frame, right? Something like this, 2 point, maybe it would be a little larger, maybe it would be like 3, right? Someone would be risking, let's say this was the H1 time frame or the H4 time frame, someone would be risking 116 pips for 355 pips based on the higher time frame, right? You'd have to wait through all of this in order to get 3% back on your trade. Well, how we trade is we wait for price to actually enter this zone, and then we look for a certain schematic for price to push to the upside, and our stop ends up being, 5 to 7 pips. It's really lower than 5 to 7 pips, but we're just going to leave it right there for now. And then we'd be looking for something like this. All right, and just to prove that to you guys, let's actually go to UJ. All right, we did have some Fed news that released, so let's see how we're looking on this current position. So we did push to the downside just a little bit. All right, but we can see basically, this is a prime example right here, right? 4.6 pips is our risk, and 164 pips is our take profit right here, right? So very, very similar to that concept right there. All right, so let's go back to NZD USD. Let's get rid of this, and let's go back up here, right? So we don't just, I'm explaining to you all how I refine my order blocks, right? But I don't just wait for price to tap into an order block and then I take a trade. And really, I look at it as supply and demand. I don't even look at order blocks and institutional order block. I don't even do that. I simply just look at supply and demand. But I'm going to use the lingo that a lot of people use, so you all know what I'm talking about. So we'll just say bullish order block. All right. So this is one way how to refine. Now, the pros to this is you're more than likely going to be put into the trade. Okay, even if a little tip for you guys, if you want to use 50% of the order block, you can definitely do that as well. All right, so just using 50% of the higher time frame order block, that works as well. The cons is your zone is going to be extremely large, or larger than it needs to, relatively speaking. It doesn't matter if you're on the H1 time frame, H4, M15, M5. Your zone's going to be a lot larger than what it really needs to be if you were to refine. Okay, so this is the first style. We'll just say full order block on your higher time frame. Okay, you can also, so we'll put 1. All right, you can also use 50%, all right, of that order block. The second style is going to be inside candles. Okay, inside candles really help out with refinement. because it allows you to basically decrease your zone a lot. A lot. Actually, no, we can leave that. Right? So inside bars, inside candles, definitely something that I use. An inside candle is basically a candle that prints inside the range of a previous candle. Right? So you see how this candle right here, this bullish candle, stays within the range of this previous bearish candle. Right? That means that this right here is an inside candle. Okay? Pros of an inside candle: your refinement is going to be a lot better, right? So we can see we went from risking over 100 pips on this mock trade right here to only risking 50 pips, 50.3 pips, and that increases our risk reward by 2. All right, so inside candles are options for refinement. All right. My third way that I'll use, and I really don't use the number 1 style, I'll use number 2 and I'll use number 3 depending on how price is looking at that point in time. Okay, so right here the third way would be Wicks that grabbed liquidity. Okay, now before we get into the Wicks that grab liquidity, the pros and the cons of inside bars. The pros are basically you have a tighter refinement, okay, lower risk. Well, it'll be the same risk, but increased reward because your stop loss will be smaller than if you were to use this entire zone right here. Okay, the cons are price may not pull down to this area right here, right? But I would rather sacrifice getting striked into the trade than to always get striked into the trade but have terrible setups. Right? So I'd like to get those small zones, and sometimes I have a couple of examples on my YouTube channel. Sometimes we will refine so much to where price will miss out a trade by 1 pip, 2.5 pips on last week USD JPY as well as GBP USD. Sometimes that will happen, right? But what's most important to me is making sure that the trade setups that I do have are high probability and are very logical. Right, that's what's important to me. The last way is going to be Wicks. All right. So for those of you who trade with me, and let's say you use those lower time frames, you understand that Wicks on a higher time frame simply means that there is something unmitigated within that area on the lower time frame. Right. So this is one of my favorite styles of refinement. I only use it during certain times. Okay, it really just all depends on what price is doing and what's going on. Let's say this wick was a little smaller. Right, especially on the lower time frame, that's when I will incorporate something like this. All right, but the pros of using Wicks are you can get the best of the best type of entry, right? Because we know that within Wicks there's some type of supplier demand that has been unmitigated. And remember, it always has to be at a point of interest, right? Like don't just look for these patterns anywhere on the charts. Make sure it makes sense. Make sure there's logic behind it, right? So in this case right here, we can see that we have this wick, okay? Price pushes to the upside, and then we'd be waiting for price to pull back down here, give us our entry confluences within this zone, and then we'd look for price to push back to the upside while taking profit along the way right here, similar to how you guys see, right? So that entire schematic, let's say it formed right here for our entry. We took our entry and then we're taking profit at these areas right here to eventually break through our swing structure, which on the mock-up would be right here, which we just saw in UJ as well, right? So those are how I basically refine. Full order block based on the higher time frame, you can use 50%. I hardly use this for entries. I never use that for entries. Never. You can use that for a zone, but never, I just would not suggest taking a trade based off of the H4 time frame or the H1 time frame. It just doesn't make sense because by the time you catch 5%, we've caught 20 to 30%. right? Just because of our entry method and our refinement style, right? So I would suggest everyone use those lower time frames within your higher time frame point of interest. Use the confluences that you know to use in order to really take advantage of price. All right. The second style is inside candles. Okay. There is an indicator that will show you inside candles. So just go up here on your trading view, go to indicators, and search that up. Okay. Inside bars are going to be important. All right. And wicks that grab liquidity. Okay. Now, you have to make sure the wick grabs some type of liquidity to the left in order to use it, because when that happens, that means that there is some type of demand that was left right here after liquidity grab, which pushed price to the upside. So you'd be expecting, if supply had failed, so let's say we had something like this, okay, this supply failed right here, okay, and we have a breakup structure on the higher time frame. So that means that there is some type of demand within this area that, let's say, grab liquidity right here. There's some type of demand that was responsible for this failure of supply. Okay, so you'd be looking for price to travel back down and mitigate the demand that was responsible for that, for price to continue to push to the upside, right? It's just like I was giving this example to one of my students, but let's say, let's say the supply of Louis Vuitton decreases, okay, which would mean that supply fails, okay, because there's a lot of demand within the market and supply decreases. So we have a supply failure, which is this right here. What happens? Because there's a lot of demand within the market, everyone's going to be trying to acquire that piece of Louis Vuitton. And then what happens? Then price pushes to the upside simply because demand outweighs supply. So demand is being respected while supply is being disrespected. Think of the markets like that. Basic economics. I had a little brain fart there. I was going to say microeconomics, but it's really macro, right? It's just basic economics. I mean, you can apply microeconomics to the charts as well, but just think about it, right? If supply fails, it's because of demand. It's because there's a lot of demand. Demand is up. Demand is high, right? If demand is high and everyone is, okay, let's use a more recent example. Masks and hand sanitizer, right? The demand for masks and hand sanitizer increased drastically over the year of 2020, right? There wasn't enough supply within the market in order to feed the amount of demand that there was for masks and hand sanitizer. So what happens? Supply fails, right? If supply fails, it only fails because of the increase in demand, which does what? Pushes price of those products and materials to the upside. It's the same exact thing. Now, the information that I just dropped on you guys, it might not click right now, but if you rewatch this video and listen to the last explanation that I give of supply and demand, it will click for you. I promise you it will click for you. And if you're still having trouble, click the link in the description, sign up for a one-on-one session. Either sign up for a one-on-one session or just go ahead and move forward with joining my mentorship program. Even if it's just for a month, sign up for your one-on-one sessions during the full month. Okay, it comes with your mentorship program. Watch the recorded content. But what's most important is like tapping in with me on a one-on-one session. Because if I can break down exactly, like systematically, exactly what takes place in the market, I promise you, you will never be able to unsee it. You won't be able to unsee it. You just won't. Right? So with that being said, I don't want to, make a super long video. I'm going to go ahead and wrap this up. But these are basically the 3 styles that I refine my order blocks. And I think you guys are going to be able to have success. So it's just 3 different styles, right? Just 3 different styles, and that's it. So you don't really have to think about, do I use this whole zone? Do I use this whole range? You don't have to think about that. Just follow this right here. If you see a wick that grabs liquidity, use that. If you see an inside candle, use that. If you want to use the full higher time frame order block, use that. And then you can, if you want to take your entries based off of that, then just use 50%. Right. A lot of you guys contact me and ask, how do I take my entries? I save all of that information for my mentorship students. It's proprietary. I have to save, some information for those individuals. So I save all that for my mentorship students. But if you are interested, feel free to join my mentorship program, or simply just sign up for a one-on-one session. The link for the one-on-one session is down in the description below. Okay, and then my mentorship session link is going to be the matrix trading link down in the description below as well. All right. With that being said, I'll catch you guys on the next video. Hope this helped. If it did, please leave a like on the video. Peace out.